Hi, it's Clelia, and I am so delighted to be here today with Daryl and Scott to talk about the market and how it connects to all of our businesses. So, Daryl and Scott, let's start with the kind of high level macro. You know, in March, I think we all expected or we anticipated that this could be a catastrophic event for the real estate industry. And it really hasn't turned out that way. Can you talk about what you've actually seen happen?
So going into the pandemic, the housing market was in a really strong place. People had a lot of equity in their homes. The kind of people that owned homes had really good credit scores. And that's really a hangover from the last foreclosure crisis where, we learned the lessons of subprime mortgages and giving people mortgages for homes who really couldn't afford them. And ever since then, lenders have gotten really strict about who could actually borrow to own a home. So, and also home prices have gone up. So people who had homes going in had a lot of equity, a lot of cushion. And at the same time, the pandemic has changed the relationship people have to their homes to the point that people are spending more time in their homes and they're really starting to think if the home that they're in is really right for them. So we've seen an increase in demand, and the people who own homes are not rushing to make sales at a point of weakness. So that's why the housing market has just remained so strong.
Yeah, and I think what we found is that, density isn't as desirable as it once was. People don't want to live in these core urban environments and are looking to escape to more suburbs and more rural environments to be able to, spread their wings and get into the pools and go explore the outdoors, right? And so that I think what's a big trend that we're seeing as well is that the burbs are an attractive place to be these days.
Yeah. And, we've actually seen in housing basically a true V-shaped recovery, right? That we started from a strong position. We dropped pretty precipitously in, kind of March, April, May period. And then we've seen a really strong rebound. What are you seeing, directionally in terms of what's coming next? Do either of you have an opinion about what we'll see between now and the end of the year and maybe going into the first couple of quarters of next year?
So we've seen a lot of people come off the sidelines in terms of wanting to buy a home, but sellers have been resistant to list their homes. I think that just has to do with the pandemic and not wanting to expose yourself to people coming into open houses or dealing with moving during a pandemic. But I think that once sellers see how much prices have gone up and how much of a seller's market it is right now, they will come off the sidelines and we'll see an increase in the total number of sales.
Yeah, from my perspective, I think, we found that forecasting is very difficult in this environment, as the biggest variable we have, is not predictable at all, right? And so, but what we do see in our market, in the vacation rental market is that, the shuffling has happened. People have sort of rethought and readjusted to how they're going to work, how they're going to learn, how they're going to live generally. And so I think a lot of that sort of pent up demand, thinking about like what their life looked like in a COVID environment has happened in a lot of ways. And so from my perspective, we see just sort of like less demand and less people moving going to the next few months as people sort of figured out how they want to live, in this new environment, which is a bit different than how they used to.
And one thing I just wanted to give you an opportunity to explore, Scott, is I'd love to dive deeper into the data with both of you now, talking about where we see particular strength in the market and where we see weakness. But before we do that, can you just frame for us why the data that you have at AirDNA, is even relevant to this discussion, and what vacation home short-term leasing tells us about the market overall?
Sure, yeah, happy to. I think first off, an eye-opening stat is that there's 7.2 million second homes in the U.S., which is, 5%. It's a sizable number of the properties. And we've seen about 2.2 million properties listed and rented on Airbnb or Vrbo, one of these vacation rental sites, for the last year. And so while that might seem like an infinitesimal couple percent of the market, how is it really moving the market? We look at some places like called Nantucket, 65% of the properties are vacation rentals. If you look around the Colorado mountains, there's a lot of markets that are really a high percentage, call it 10+% of the whole housing supply is vacation rentals. So that's sort of one thing, it can be a relevant supply. Two, it is a leading indicator in some ways, for a few reasons. One is oftentimes where people travel is often where they want to live. This is one thing that we've seen, and you could see cool towns or cool destinations being hot as an Airbnb market before they're hot as a place to live permanently. And two is that, short-term rentals have grown a ton over the last 10 years, and people are still figuring out how to grapple with, what does that really mean for home values, right? If you can rent a $500,000 home for $200,000 a year, like what does that mean for what that property is actually worth? Should it be valued in a new way? And what we see in some of these markets, take the Smoky Mountains of Tennessee, is that houses are actually trading in a different way. They're trading based off of a cap rate, of a very sort of a commercial metric of like what that property is going to earn over time. And over the last 4 years in, say, Pigeon Forge, Tennessee, property values have gone up by 60% because people are sort of reevaluating what that's property worth if you can predict revenue and a net income from that property. And so we do see a high correlation between a lot of profitable vacation rentals and where home values are going to appreciate over time.
Awesome. Thank you. So let's dive in and talk about really how this data starts to parse out. I think there's been a lot of discussion about kind of flight from the cities, and that's grounded in some real data, right? I mean, we're seeing some real differences in how things are performing.
Yeah, when we look at some of our migration data, you can definitely see that people in San Francisco or New York, they're looking for smaller cities, or they're looking into the suburbs, the outer areas of where they live. When you look at actual home sales, rural prices are up much more than suburban prices or urban prices. And you can also see it in the types of homes that are being bought. So larger homes are being bought more frequently now, and single family homes are outperforming condos. So across the board, people are looking for more space, less density, bigger backyards. And also a new trend is wanting a home office because remote work is the norm now.
Yeah. And Daryl, you actually did a survey on this, right? Where people indicated this.
Yes, so we asked people how the pandemic has impacted their home buying preferences, and the number one response we saw was that people wanted a designated space for working from home. And after that, it was wanting more outdoor space, which makes sense. You want to be able to enjoy your private pool or private backyard when you can't enjoy public spaces. So the pandemic has definitely changed the preferences that people have for homes.
Yeah.
I don't know how much time you've spent in your house lately, but I've spent a lot. And with 2 little kids, there's not enough space I could possibly afford right now. And so I think that's driving the trend, right? Is it used to be, you'd spend, your sleeping hours at home and most of the time out and about at restaurants with friends, but that's sort of been totally spun on its head. And you're spending so much more time at your house. So, I know me, my friends, and a lot of other people are sort of just thinking about that differently. So I'm spending a lot more time here. I need some more space because, whatever, kids are driving me crazy.
Yeah, and actually one of the things that our data doesn't tell us is who's already left. And I wonder if people have already left the city, are staying in an Airbnb and kind of feeling it out and looking at homes while they're in their Airbnb or Vrbo rental.
I'm curious, and this is really opinion, but you two are people who spend your days steeped in thinking about this market. So how permanent do you think these changes are? I've said a number of times that I feel like we're going to have seen a decade's worth of change basically happen in a year as a result of COVID. But some of the trends that we're talking about, I think they were underlying trends. For instance, a move towards secondary and tertiary cities, but like a large scale move out of primary cities. There were some trend lines there, but I don't think anybody expected everyone to leave New York and San Francisco. Do we think that is a more permanent move, or do you think that people are going to kind of come back as the cities rejuvenate themselves?
And I think everybody has an opinion on this topic, but I'll take it and you can fill in the blanks. I mean, I think the way people are working is really going to dictate what's going to happen with people moving back to the cities. As people don't have plans for employees to come back until the end of 2021, I think a lot of businesses, mine included, are really embracing this, work remote, and what does this mean? And what are the new opportunities? And it's not as bad as maybe I thought previously. And I think a lot of companies are rethinking, where their employees need to be and how often they need to be driving into their office. So I really do think sort of the job market and how people are working, and educational institutions as well, how they pan out is really going to dictate that. I think if you ask 10 people, that you have 10 different opinions about how quickly it snaps back, like a rubber band, right back to everybody wants to get back to the middle of New York City. I think a lot of people, like in the vacation rental space, that have like traveled for the first time to an Airbnb, like this is great, and a lot of people that are sort of now moving to the burbs and saying, hey, like this isn't so bad, it's not so bad out here. We'll be like, well, yeah, why didn't I do this earlier? And so I think, there's a lot of opinions on the topic, but I think it's not going to snap back. But I think it is a real change. It's a real change that's going to be, a decade's change in a year. I think it's a good way to define it.
So I think we've reached a point where enough companies have said that they're not going to require people back into the office, that other companies are going to have to follow suit in order to be competitive. So if, Google has already said that you can work from home, then another tech company that's competing for a worker from there is going to have to offer the same deal in order to get them. So I think long-term, people are going to end up living not where they have to live in order to be close to work, but where they really want to live. I think once the pandemic is over, there are going to be people who truly want to be in New York because of all the culture that's there, and the same is true for San Francisco. But a lot of people are mostly motivated by affordability, and I think that's going to continue the trend of people leaving the really expensive cities for the more affordable areas. And maybe that'll make the expensive cities actually more affordable, since there won't be as much competition there anymore.
Yeah, it's interesting how this stuff happens in a cycle, and you do see kind of affordability, increasing and then declining as people then come back. And yeah. So let's talk about a few of the other trends that I think had come up for both of you. Daryl, you talked a little bit about the preference for single family homes versus condos. And Scott, you alluded to the fact that you've seen a similar things in terms of rentals. Is that a widespread phenomena that you're seeing across the United States right now?
Yeah, if you look at almost any city, you can see how the sales of condos in the city center and the downtown have fallen. Listings are up, prices are down, but in the outskirts of the city and some of the more suburban areas, there's a ton of demand and listings are flying off the market faster than they're entering the market. So it doesn't really matter what city you look at in the country, you see the same trend between urban versus suburban and then even rural.
And can I just ask one quick follow-up question from your earlier, you mentioned rural, suburban, urban. How much with rural is what we're seeing just almost a recovery in prices to start to get closer to suburban pricing or urban pricing on a percentage increase basis? Because, I know rural property had been depressed historically.
Yeah, I think a lot of it is just sort of an equalizer. People are going to where it's more affordable, and that's increasing prices in the places that are most affordable and slowing down price growth where places are really expensive. So there isn't as much of an advantage to living in the city center close to your job. And so they don't have this price advantage that they used to have over living in a rural area, especially when the amenities of the city center aren't available anymore.
And Scott, are you seeing any similar sort of trend, with the way people are renting, even for the short to midterm? Has there been an increase in preference for, rural spaces?
Yeah, absolutely. And we're seeing people book really at record levels in a lot of these markets. And a lot of places that weren't particularly great places to go to in July and August are having, really spectacular numbers. Think about maybe Palm Springs, not a great place to go in August. They're up almost 100% year over year because people from LA, they don't really have that many options to go to, right? You can't fly to Hawaii like you used to, or Mexico very easily. And so people are choosing different options. And so what we see is a sort of sweet spot, call it 200 miles around major metropolitan markets that are just seeing insane demand because the optionality of where you can go and where you're used to going, people are getting into cars, not into planes. And so it's really redefining how people are traveling right now. So all these lake towns in like Maryland and, really around the world are seeing, Big Bear Lake outside of LA are seeing great numbers. Lake Tahoe is seeing incredible numbers too. So we do definitely see this sort of flight from the cities, and it's not just short-term, long weekend, 4-day stays. We're seeing, 4-month stays, right? And people are sort of in this, what we're calling sort of isolation tourism. Let's go somewhere for a few months, wait for this thing to sort of chill out before I go back home. So we're seeing a lot of the longer term stays on the Airbnb platforms.
Yeah, I mean, I think I myself have been engaging in some isolation tourism, so I understand. Let's just wrap up with a discussion of, with many of these macroeconomic trends, since real estate is such a local business, if you're someone who has a local expertise in a market, this is not a business where you can easily pick up and move to another market and start again. What advice do you have based on the trends that you're seeing in the data for broker owners, real estate agents to keep their business robust during this time, regardless of where they are?
Well, I think within any area, you're going to see some of these divisions. So condos versus single family homes, or suburban versus urban. So if you're not having luck in like an urban area selling condos, you might want to look and try to drum up some business in some of the more suburban areas where there's single family homes. And there's also like a huge difference between the sell side and the buy side. If you're trying to sell a condo, you might have trouble, but if you're trying to sell a single family home, it'll probably like fly off the market really quickly. But then if you're on the buy side trying to help your buyer buy a single family home, it may take multiple offers and it may take months for that buyer to really be successful. So there's a lot of different pockets where you may be successful or maybe less successful.
Yeah, from my perspective, I think, short-term rentals, vacation rentals is definitely a niche. And we don't really see that niche being covered very well by many of these real estate agents and brokers in all these markets. There's a lot of tools out there to understand how much any property can earn as a vacation rental, how much without lakeside home earn versus the one across the street with the mountainside view. There's a lot of tools out there to really help these second homeowners that are fleeing the cities, going to these traditional vacation rental markets, help them understand what's affordable, how much can it earn in the off season when they're not staying there. And so I think there's a really opportunity to really become special in the vacation rental market as we see a lot of investor activity and a lot of second home purchases. I think there's still a nice opportunity there in a lot of these markets.
That raises one final correlated question for me, Scott, which is how, do you think this is going to increase the size of the secondary home market? I've heard, for instance, that a lot of people in New York or the suburbs are buying homes, but they're kind of hedging by saying, maybe we'll move back to the city and then we'll keep this as a weekend place. Or, if you're a working family, I do think people are anticipating that they could now spend part of the summer, for instance, living outside of the city, even if they go back to the city during the academic year, because they'll continue to send their children to school there.
Absolutely. I think it's, a lot of people don't want to pay whatever, $5,000 a month for the Airbnb. They're like, why don't I just, spend some money and buy the property and I can monetize that when I'm not there post-pandemic or off season or wherever. So I think it is inspiring a lot of people to figure out where they want to purchase. I think there's a change. There's a sort of a difference though. Like a second home used to be very much a status symbol purchase. And now it is much more driven by the economics of it, right? Like how much is this worth? What is, how much can I earn in what months on this property? Can this be actually a cash flow positive property when I'm not staying there? And so that's driving a lot of the decisions on where to go, where to buy. We see a lot of reasons for supply to grow on the Airbnb platforms. A lot of people just don't want to have the faff. They don't want the hassle. They don't want the stranger break in their nice antique vase, right? And so there's a lot of people that may be more in economic, trouble or tougher economic times will just be motivated to list their properties. But we do see a lot of activity for new buyers in the second homes.
Awesome. Well, thank you both so much. This was very valuable for me, and I hope for everyone else. And it's always a pleasure to speak to both of you about what's happening in the market.
Great chat with you too.
Thank you for having me.
Thanks, guys.